Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 10th of July, 2020. Another summer weekend here in the Northern Hemisphere. This is episode number 1794. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let me just clear my throat here a second. So here we are on a Friday after a pretty interesting day yesterday. A lot of news-driven action yesterday and overnight. This morning, the markets are really mixed. We have the Euro Stocks 50 leading the board based on percent change from yesterday's settlement, followed by the DAX. The Euro Stocks up 0.86%, DAX up 0.81%. Gold is trading at 1814. It's been stuck in this 1800 and teens area. Regardless, gold is higher than it was, a month ago. And then we have safety assets. The bonds are up 13 ticks. The Bund is up 22 ticks. The yen is up. But we also have the Nasdaq, which is up, which really tempered the drop yesterday. The Nasdaq stocks really held up pretty well. The tech sector held up pretty well. Crude oil just crossing into the negative mark with down a penny at 39.61 from settlement. August crude, and then the 10-year note is up half a tick yet again. So another mixed day, and we are trading around that big 31.36, 31.35 half composite point of control, or micro composite point of control and high volume node. So we'll discuss yesterday's drop a little bit. Definitely was in the cards. Everything's in the cards when it comes to the market. Anything can happen. We need to remember that. But did not expect that big drop. But even the drop was followed some structure, another V bottom by the dip kind of drop yesterday in the equities. In terms of what's ahead, this morning we got to PPI, which came in at negative 0.2, expected at plus 0.3%. So that's a negative swing of 0.5%. The main thing that's driving the market right now, according to several outlets, the U.S. daily cases hit a plus 60,000 in one day for COVID-19. That is a record. That's a record here in this country and globally for one day. So cases hit 60,000 for the first time. At the same time, the IEA warns on oil demand, expecting a push in oil demand. There's also a play on tariffs. There's a struggle between the U.S. and France currently that has flared up on a what do they call it? A technology tax. To collect taxes from Amazon, companies like Amazon, Alphabet, Facebook, and these kinds of companies. And the U.S. has warned that it will impose tariffs if that happens, and France is saying, nope, you're not going to tell us what to do. So that's where that stands. In addition to that, Hong Kong closed its schools because there's been a surge of cases there. Again, the market responding. In addition to that, the Chinese state funds have been selling equities to temper the markets a little bit. The market's responding a little bit to that. And so that's all kind of the mishmash that's in the box today to deal with. Again, coronavirus cases in several U.S. states led to worries that more lockdowns may be necessary, disrupting business activity ahead of the start of the second quarter earnings next week. Asian shares were in the red, while Italy's rebound after strong May industrial output data pulled European stocks out of a loss. And that's what we have to pay attention to today. Now, yesterday at about 9:23 Central, 10:23 Eastern, the Supreme Court of the U.S. came out with the decision that barred the congressional committees from getting access to President Trump's financial records but it granted the New York State prosecutor to get that information to look at prosecuting President Trump, especially if he doesn't win the election, on what on some financial stuff, and also it's intended to show or reveal potential issues or conflicts with in his relationship with Russia or something like that. So what we have there is a political problem, but it's a political problem that the markets are responding to, and that's why I'm bringing it up here. So we had a big drop, and then we had a V bottom. So that was a very much a news-based to kind of move. Did not anticipate that. Expected the market to pull back yesterday and push higher. Let's look at what was expected. Well, as far as what's on deck for today, what's remaining, we don't have anything. We're clear in terms of two-star, three-star impact um, numbers. So let's get into what was expected yesterday. Yesterday, scenario one was expected to open at about 31.67, and we were looking for a drop as far as 31.55 right in here, and I was looking for it to break the double top at 74.50 and squeeze to 89.50. That was the main scenario yesterday. The secondary is a push through the overnight high and then a dip back into the prior day's range for continued balance. Here's what we got. What we got is something completely different. What is going on here? Yeah. What we got yesterday is something completely different. Um, so completely wrong on that read. We did open at 67. We pushed to 70 and then started responding, which means which was in line with scenario one, and the expectation is it would push down into 31.55 right in here and turn up. What it did is it turned back up to 31.63 with a push into 31.52 quarter, and then the news hit. We had a first impulse pullback consolidation, a bigger impulse pullback, and then continuations that took us below yesterday's low. So we opened above yesterday's high or the prior day's high, and we tested below the prior day's low, and came back into the range. So this is a normal variation day type. This is the most common day type where we break one side. But again, the market, where did it push to? Remember, the target on the upside was 31.89. So the target on the upside, again, balance to balance, is 31.89.50. That's that, you know, I was leaning that way based on all the information that I had. And then the target below is 3104 as the MC point of control below. It's marked right here, somewhere 3104. What the market did is it pushed down into the last balance and then bounced right back up. Very orderly test there. It actually came up short. Here's what it looks like in the bigger picture. Here's the profile. This is the composite profile that we're dealing with, and we were up here in this balance area. Okay, so this is an important area, and then we cleared the low volume node. Cleared the low volume node here at 31.48 or so, and then this is the next balance area. But the main point of control, the most accepted price in this area is 3104-ish, 3104.50, and it tested it right there. So it went right to it. I got to tell you that the sell-off was not easy to trade. You had to be a breakout trader to catch that. And then we had a V bottom bounce. So everybody that was trying to trade off of a VWAP pullback or a mid pullback saw a squeeze and a squeeze and a squeeze. Active price discovery throughout the day. Good volume yesterday. 1.61 million contracts. It's about 70% more than normal, or what's common these days. But look at where we are, okay? Don't forget the bigger picture. Look at where we are. We've gapped up and we have just been stuck in this upper balance in these days that just keep checking down, then open up, then check up, push down, push up, pull down, come up, pull down, come up, pull down. That is balance. So that's the overall picture of what happened yesterday. We've pushed last week's high. Okay. So we're higher this week than last week. So we have a higher high on the week. I think the bulls are still strong and are still intact. And the shorts are more at risk, in my opinion, as this continues. But the more the craziness that happens with the southern states, with the COVID-19 issues, the spike in COVID-19 cases in the Sun Belt states shows no signs of easing, with deaths hitting a daily high in Texas and Florida. In Mississippi, the leaders of both legislative houses were among 26 lawmakers to test positive for the disease. These are people who are insisting that you don't need masks, and that's not a debate we're going to have here. President Trump is set to visit Florida for a fundraiser today as the ongoing crisis takes a toll on his support. Outside the U.S., Hong Kong announced it will close schools again to help contain a new bout of cases, while China said it had found the virus in samples of imported shrimp, raising questions over whether the pathogen can be spread through food. It's just, I don't know. It's just a total head scratcher here. It just seems like more than ever, everything just impacts the market. Like the market is just responding to every single thing. And so this news kind of stuff is impacting us in a way in that we are constantly dealing with these um, surprise announcements that just keeps hitting here and there. So as the Chinese news comes along, last night there it is, the Hong Kong news, and then more COVID-19 news out of China in the overnight session, pushing us into the European Open, which occurred right here. We have some pretty decent liquidity just below. Those of you who think I'm making a political statement here, you're clearly not listening. I don't really care about I do care about the politics because I live in this country, but that's not the reason I talk about it here. It is impacting the markets. Um, uh, it's impacting the markets, and so we need to pay attention to it. Again, we have some liquidity at 50 above, and it looks to me like we are set up to continue higher. We are set up to push higher. Again, the market did push strong below yesterday and came back into the initial balance. So it's relatively strong, and I think those who got short early are likely to see a squeeze today. It's hard to say, but these days it's difficult to surmise what the market's likely to do. Back to review real quick. Here's the big picture. This is the composite chart. Each bar represents one trading session, RTH only. And essentially, this is what we've done. We've pushed up, pulled back, and we have been kind of stuck and grinding in the middle here. And we're not far from the all-time high, really. From the all-time high, we're definitely not far from pushing to balance. And that's what we did here this week that is remarkable, or that is, remarkable in the sense that we need to pay attention to it. We closed this gap that we put in back here. We closed this gap. Normally, when we close the gap, we start a squeeze because the market is coming back to an area previously rejected, and it's likely to push up. And that's why I've been talking about this 3189.50 for the last few days. It's the most probable play is a test of this balance zone here, and that balance zone has a point of control of 3189.50. It says POC right there for point of control, 3189.50, and that's why I keep bringing it up. As we push into this, we are likely to test the most valuable price above, and that's what I'm expecting. Notice that as we are pushing higher, the overall daily delta is flat to moving lower. The range is dropping. Volume's been relatively steady, but range is dropping. That portends a summer squeeze as well, given the time of year we're in. Okay, so what are we expecting for today? Let's switch to that. The overnight session, by the way, was relatively balanced, a wide range, a strong volume. There was a lot of price discovery in the overnight session. So I expect that there will be likely be some balancing out or some positioning in today's trade. I don't expect this to be a typical lazy Friday, summer Friday. And so looking for today to have a pretty active price discovery. This morning, we're opening on top of yesterday's point of control right near the close. The market has tested down and pulled back up in the overnight session, just like it did here. It did so in the overnight session as well, with the low being at 31.1150. The expectation this morning, chop likely to pull lower as far as 31.38. And then I'm looking for an impulse up that is likely to push the overnight high. I'm expecting the overnight high to go for the overnight stat, and then I'm looking for it to work itself back into or near yesterday's high. A squeeze is what I'm expecting today. This doesn't mean you should get in and just get long and close your eyes. We still have to respond to the price action, but that's the most likely path here today. Secondary, if we push higher off the open, looking for it to consolidate for a little bit, chop around, push the overnight high. If we do get an impulse down, then the longs are likely to have to be pushed out into the weekend, come down to 31.35, consolidate, and then potentially test into this 31.26 area and the overnight point of control at 23 before it settles out. Yesterday was a relatively wide range. So don't be surprised if we have an inside day today. But every move down in an uptrend, every bearish move in an uptrend has resulted in a market that is rallying. So just be careful. This morning we're likely to have chop. Why? Because we're opening right on top of the point of control, right on top of the prior day's range after having tested pretty low down there. Okay. Good luck today, and I'll catch you tomorrow. Or Monday. Take care and have a great weekend. Don't forget, it's like Friday. Hit the like button before you head out. Cheers.